A reverse market crash is when asset prices suddenly balloon in value, leaving the poorest behind and making the rich even richer. We hear things recently about a coming recession or about the stock market about to crash, but the reverse market crash is actually much scarier, and for those of you that invest, you definitely need to pay attention. In 1914, 4 German marks equaled $1 US. By 1923, it took 1 trillion marks to equal $1 US. This was caused by a variety of factors, but most essentially, this rampant inflation was spurred on by the German government being forced to print money to meet the massive reparation costs incurred by the Treaty of Versailles, which ended World War I. America just printed a bunch of money during COVID time. All-in spending was approaching $13 trillion as of mid-2021. That's more than the US spent in its 13 most expensive wars combined. $5.2 trillion for COVID, plus $4.5 trillion for quantitative easing, plus $3 trillion for infrastructure. World War II cost $4.7 trillion in today's dollars. In this video, I'm going to give you 5 places to invest your money today in 2024 and in 2025, because the very real possibility is that we might be in for a rude awakening. Now that the Fed is bringing down the rate, this doesn't mean that inflation is over. Does it feel over to you? It costs like $9 to get a latte. I spend like $100 to get 1 bag of groceries. Prices are just getting crazy. Patrick Bet-David breaks down this idea of the reverse market crash and inflation. I watched this clip the other day and I had to show you here on my channel. After this, I'll tell you exactly what you as investors need to do as soon as possible.
Like I told you earlier when we were talking, my bigger fear is a reverse market crash, which Venezuela just went through, which all of a sudden the rates get lowered and Dow and S&P goes. And Dow goes from 33, 40, 45, 50, 55, 60, just goes boom.
Is that just the dollar losing its purchasing power?
Yes, exactly. That's what happens. The more we're printing, like, for example, a Michael Jordan card years ago, a BGS 9.5, sold for $78,000. I was like, oh my God, that's crazy. But then all of a sudden, all of these boxes kept entering the marketplace of 1986 Fleer. So guys started buying these things and they were sending more to get graded at Beckett and PSA. The more they got cards graded, that $78,000 card, BGS 9.5, became a $60,000 card, $50,000 card, $40,000 card, $30,000 card. You can probably buy BGS 9.5 today for $20,000, $25,000, okay? So the inventory increases the more we print money. The more you print dollars and it's more accessible, the less it's valued, the less it's worth. So these are some things that's going on today. You know, like you sit there and you're like, okay, so does this mean guys are not going to make a lot of money? No. You're going to see the first trillionaire in the next 24 months because none of this is going to affect the guys at the top. None of it. This printing money. Every time they print money, the guys at the top make more money. If there's anybody that should be against printing money, it's low and middle income families. If there's anybody that should be against printing money, it's them. If there's anybody that's for printing money, guess who it is? The guys at the top. Why? Because the poor and middle America can't keep money. They spend it. And when they spend it, what do they buy? A product owned by somebody in the S&P 500 or other people who have businesses. Money flows up. They can keep printing money all they want. So when low and middle income families are like, look at these guys, all they care about is themselves. Let that bill pass for $2.7 trillion. You simply look at them and you say, you have no clue how money works. You have no idea how money works. Now, guess what? Let's print $10 trillion. The rich are okay with it. You ain't gonna get the rich complaining about printing $10 trillion or $5 trillion. BlackRock's going to be like, all right, cool. We're at $8 to $10 trillion of money in our ETFs, and we're buying up a bunch of different companies. We're buying up all these properties today. Right now, it's going to be nothing. But in the next few years, you have to go through us, and we dictate the market, and we're going to own it all. And what are you going to do about it? You know, these are a lot of different moving parts that is going on to me. And again, for me, the idea of middle America not being able to make the money they need to make to be able to afford a house, send their kids to school, live in a nice place, enjoy some of their dreams, maybe not the biggest ones, but some of their dreams are going to become a reality. Middle America is getting smaller and smaller and smaller every single time we print money.
So the middle class is just shrinking. Pretty soon, it won't be enough. If you were like me over the last couple of years, you were just baffled at how the stock market kept going up during this volatile and seemingly negative economic time of this history. Well, things are starting to make sense, and we're definitely going to be seeing a fallout because of this. I'm going to explain what I'm doing moving forward and how you might want to consider to invest with 5 different places to invest. But first, thank you to Moomoo for sponsoring this video. And Moomoo's actually gonna give you 15 free stocks to get started on their platform and up to 8.1% APY for your cash. Moomoo's great because it has very little to no fees and $0 commissions on trades and has a really awesome user-friendly app with so many tools. Click the link down in my description to get up to 8.1% APY on your cash, and you can get 15 free stocks through this promotion on my channel only. Okay, so the basic idea is that we definitely need to get our money working for us and not just sitting in cash alone, obviously. But the problem with this very real situation is that maybe investing isn't enough by itself. We're really starting to see what might become the consequence because of all that COVID money. By 1922, German prices had risen by 700%. This phenomena is termed hyperinflation, when government printing of currency causes a nation's currency to become virtually useless. The same phenomena happened to Argentina, Zimbabwe, Turkey, and Venezuela. Although it differs from case to case, hyperinflation is caused by 1, quantitative easing or printing of money, 2, excessive intervention in the free market, and 3, price controls. These actions are usually pursued by politicians seeking favor from the masses through welfare policies that are popular in the short term but lead to long-term disaster. That sounds a lot like what just happened, and that sounds a lot like some of the things that we're hearing from politicians during this presidential election right now. Knowing this, we have to understand that just because something helps us in the short term doesn't necessarily help us in the long term, and it probably actually hurts us in the long term. So we need to prepare ourselves. Here are 5 places to invest your cash or replace your cash as soon as possible. Number 1 would just be in stocks, in the stock market. The idea is that we want to continue to buy assets. And one of the best assets that you can buy would be the stock of a company. Because no matter what happens, if the dollar starts really getting devalued, it's not like companies are just going to go out of business. They're just going to earn more dollars, and those dollars are going to be worth less, but the value of the company will continue to rise. And so if at some point we end up not even having the dollar, whatever the currency of value is at that time, that company will be worth that amount. And so if you own shares in that company, you now have that value. You definitely want to be investing in safe blue chip stocks and in companies that are solid and not ones that are just going to be like a penny stock or something that should go up like 100% in 10 days. You do want to just invest in something that's going to hold value and multiply. Number 2 is going to be to invest in ETFs or index funds. And this is just an even better way to kind of do number 1. It's still across the same idea of the fact that you want to be investing in assets and specifically within equities. It's just that ETFs is going to help mitigate risk. It's very hard to pick a winner. It's very hard to know what company is going to be the company 10 years from now. And most of the companies that are the company right now are not going to be 5 years from now, 10 years from now, 20 years from now. If you look back in 2000, the top companies then are definitely not even close to what the top companies are now. So by holding a good, solid, broad ETF, something like the S&P 500 ETF, VOO, or the Total US Stock Market VTI, that's going to be your best bet. Now, the ultimate, easiest way to get rich long-term and to mitigate as much risk as possible is through my 3-fund portfolio, and I'll link to that video after this video because you're definitely going to want to know about that. Basically, you're going to hold 1 foundational ETF, a broad US market ETF, 1 dividend ETF for passive income forever, and then 1 super growth ETF with companies like Nvidia and Meta just so that you can go ahead and take advantage of that AI boom that's coming, but also we want to keep the risk low. The third place to hold that money is going to be real estate. Now, real estate, especially physical real estate, has appreciated between 4 and 6% each year. And the idea is that you're holding something that you can actually see, you can actually touch. As far as land is concerned, they're not making any more of it, so it's a good idea to own a little piece of it. With that, you can also do things like leverage and be able to just buy a rental property or something with just a down payment. So you could just put 20% down, and so if the house is worth $500,000, you buy it for $100,000, and now you control a $500,000 asset by just putting $100,000 down. Then you can charge rent, the renters can pay off that mortgage while they're giving you cash flow in your pocket, and you get to write off the taxes. It's super solid. Then there could be times, just like in history, like when I bought my first house about 4 years ago, right before COVID, where that thing appreciated like 30, 40, 50% in the first 2 years. Obviously, that's not something that you can bank on, but it was cool to own property when everything went up. Number 4, what we're trying to find and invest in are things that go up in value over time and possibly something different to even use as a storage of value or of true value, since the dollar is becoming more and more devalued. A monetary system or a system overall that's decentralized and that there's not anybody pulling the strings might be the best bet for something like this. So number 4 is Bitcoin. By design, only 21 million Bitcoins will ever be created. The closer Bitcoin gets to its limit, the higher, theoretically, its price should be, assuming all other factors remain the same. This limit is intended to keep increasing the value of Bitcoin over time as new coins become more and more scarce, putting upward pressure on demand. Now, obviously, I know there's going to be some of you that love Bitcoin and some of you that hate it. No matter what side you're on, keep learning about it and keep educating yourself. Number 5, and this one has been quietly crushing it, and I was actually shocked when I looked up the numbers. And I'm gonna give you a little extra bonus for those of you that have stuck around all the way to the end of this video. But number 5 is kind of the opposite of number 4, but it's doing the same idea and the same reasoning to hold number 4. We may want something that's going to hold value better than the dollar might, but we might want something physical and something that you can actually touch and see. You may want to stick with the tried and true, and this one is gold. Like I said, gold has been quietly crushing it. It's up over 45% for the year, up 18% the past 6 months. That's beating the S&P 500 in both of those for 2024. And then this bonus is silver, and silver has been killing it too, up over 51% for the 1 year and up over 26% in just 6 months alone. This tells me that a lot of people are stocking up in these types of options, especially gold and silver, because they're definitely thinking that something big and bad is coming our way and we need to be putting money in other places. Watch this video to go over that best 3-fund portfolio that I was talking about from before and see how I invest with all of the information you're gonna need to set it and forget it. Or watch this one and keep yourself going strong in this investing journey.